Welcome back. You're still tuned into Trading Hour. Let's get in a conversation about the markets, global equities, and a lot more. Daniel Morris from BNP Paribas Asset Management is joining us now to discuss market fundamentals and a lot more. He's flown in from London for this conversation as well. Daniel, pleasure to have you in the studios with us. And you know, there's so much that has happened in the global economy. We've just been talking about it in the last 1 week. The big change in the government in the US, a lot of geopolitical activity as well. How are you looking at the global markets right now? What are some of your top markets that you're looking at?
Well, if you start with what happened, say, under the first Trump administration, you did see that equities overall did quite well, and U.S. equities in particular. So as a starting point, our assumption is, at least at the beginning, we'll see how things go in the future, that it is going to be, certainly relative to the expectations we had prior to the election, a good environment for U.S. equities. And so we've actually increased the overweight that we had to U.S. equities.
Okay, so U.S. equities is an overweight.
Yeah.
What else as an investment class, equity or otherwise, are you bullish on and why?
Just generally still positive on gold. We'd been quite overweight before, so we've reduced the overweight, but still a lot of these structural factors supporting gold prices. So the other overweight that's notable besides equities is gold.
Any other equity market in the world that you're bullish on?
Well, no, but it's partly a mathematical function. If you look at the size of U.S. equities or the U.S. market in the MSCI index, it's either from 60 to 70% if you're looking either at the world index or the ACWI index. So kind of by definition, if you're overweight U.S., there's not a lot else that you can overweight that's going to have an impact on that.
Okay, so U.S. continues to be the big overweight for you right now. But I have to ask you, since we are in India, talking about Indian markets, we've spoken about this big stellar rally, but FIIs have been pulling out in the last couple of months. What's your call now? Do you think India will maybe see consolidation, or will you look at India at any point in time? What are the factors you're watching out for in terms of taking that bet on the Indian markets?
I think, like a lot of people, it is a concern primarily around valuations. And I think it's notable if you look at the performance of the market, which we appreciate over the last couple of years has been quite good. But then you look at the underlying earnings trend. So earnings have gone up. Expectations are positive for next year, but it's just whether they've gone up quite as much as the price has. So hence that increase in the valuations. So I think what we would like to see is not only perhaps somewhat lower valuations, and of course that can come about one of two ways. You could have a sell-off or a correction to some degree, or if you see an acceleration in earnings, that also would bring down the PE. So I think that's probably one of the key triggers that we would be looking at before making an allocation.
Okay. So do you think one of the other risks could be any tariff activity by Donald Trump? Because that's also something that every market watcher is talking about as well, not only in India, maybe Chinese markets, maybe other Asian markets.
Certainly it's a risk. I think at this point, it's just frankly quite hard to know. There's a lot of things that politicians say, as we know, during elections. They don't necessarily do everything they say, and that's probably true in most places. So really it is a bit of a wait and see at this point. You know, what actually transpires, what are the proposals, what is Trump trying to achieve, and then we'll evaluate what we think the impact is going to be.
Is there a risk to global growth? In the event that a tariff war, trade wars take place, you make America great, but it comes at the expense of something.
Well, without question, it's a risk. I think we're all hopeful that it doesn't go quite that far.
Should you position your portfolio for that?
We're certainly not positioned that way yet. I think it's.
So your base case doesn't assume any tariffs? 10% or 50, 60%?
I don't think we have a base case in terms of how much tariffs might increase. Again, it's just stuff that's been said during a campaign. We're just now beginning to nominate people that might be in the cabinet, you know, head of trade and so on. So we really do need to wait and get a bit more information before having any kind of scenarios.
You know, Daniel, you're at the heart of what happens in the Europe, right? So there's a lot of activity there as well. Are you liking the fixed income space there or the equity markets there? And what makes you bullish on either of the spaces that you like?
Sure. You mentioned fixed income, and I think that really is the area we're probably going to be a bit more optimistic than in equities, and particularly if you look at it on a relative basis versus treasuries, because if you think about the U.S. Treasury market, you anticipate perhaps higher inflation than you had before, higher growth, and therefore higher policy rates, Fed funds rate than you anticipated before. All of that suggests there's at least the potential that treasury yields go up. In contrast, you look at Europe, growth certainly on a relative basis rather slower, arguably disappointing. political uncertainty in Germany and in France, so all of this would argue for lower yield. So from a fixing point of view, we're overweight the Eurozone government debt versus the US.
Are there any particular sectors you think would outperform, and that is something which would have an impact on global economy as well? In the US markets, is it the artificial intelligence space that you're looking at? There's so much happening in semiconductors in India. Of course, I know other countries have taken a lead there already, but is there any specific theme that you're looking at?
Absolutely. I mean, within our U.S. Overweight, a part of that is specifically to NASDAQ. So we do see that opportunity. And I would argue a bit more broadly than just AI, certainly more broadly than the Mag 7. I think our objective is to be exposed to the broad set of the opportunities instead of trying to know or to time when the particular stock is going to be winner or loser. We think there's significant potential for earnings within the NASDAQ. And I think importantly, and this is perhaps something not a lot of people appreciate, valuations actually aren't that high. They're above average, but so is earnings growth. So that warrants a premium, we think, relative to other parts of the market.
So you don't have coverage on India per se, right?
No.
It doesn't make it to your portfolio allocation as of now. So what brings you to India? What are the conversations that you're having? Who are you out there to meet? And is this a step towards you perhaps considering, investing in India?
Well, so here meeting with our clients that time of year, coincidentally after the U.S. election, but really it was more a 2025 perspective, what we anticipate for next year. So sharing our view from London, if you will, and from Paris, how we anticipate, particularly U.S. economic growth. We talked a lot, of course, before the election about a soft landing scenario, slower growth, lower inflation.
And the soft landing is now out of the window?
Well, it's maybe a bit less likely, the timing is, I think, open to question. And we're starting to envision a no landing scenario, i.e. growth really doesn't slow and inflation doesn't fall. So trying to anticipate what that might mean for different asset classes.
Okay, and one quick word on the number of rate cuts we see from now till the end of next calendar year?
Well, the market's still looking for 3 to 4, perhaps.
Yeah, but we're in a no-landing scenario, right?
Yeah. So I think, if anything, it's safe to say probably fewer than we thought before the election.
Okay, all right. Take that point, Daniel. Such a pleasure speaking with you
Likewise.
today. It is that time of the year, so getting into the holiday season as well. So thank you so much for coming down and having this conversation with us. Hope to be speaking to you very soon again.
Likewise.
Okay, all right. With that, we'll do one thing. We'll slip into a short break. On the other side, we'll be joined by Amit Ramani, who's the MD and Chairman at Office Space Solutions, to discuss the company's quarter gone by. Stay tuned for that.